It's almost amazing that like you can have private companies in Canada, given the direction the country's going. So
What a statement. Yeah, you might be right.
you should keep that in.
Yeah. Are we keeping it out or are we keeping it in?
Yeah, that's how I get flamed next, right? Oh God. Dude, I don't think we should be surprised if you see a bunch of companies leaving. I'm actually not joking. Like I legitimately think that there are companies incorporated in Canada that will truly consider moving to being incorporated in the US or somewhere else that's more private company friendly. So
Right, it's just the exit taxes that I think they're so overwhelming, they're so debilitating that to some extent I think that's preventing it. I don't know the numbers. I imagine it's already happening, but it's a tough pill to swallow leaving Canada.
yeah. And especially given what the capital markets are in the US right now, with like I would imagine that there are smaller companies who will do it. I think if you're like Shopify, you're not going to do it. But like I mean, just like between the capital availability in the US and like things like that, and like sort of direction of travel of politics that influences business uh freedom, as it were. I just think like I just think we're in a weird moment where like funny things could happen. So like, did you guys see Andreessen like raised a $10 billion set of funds? Did you guys see
I
this?
didn't, but I'm not surprised. That's wild, though. It's so much money.
Who did?
And Andreessen is going to deploy $10 billion.
Sheesh.
It's a lot. Is that mostly institutional money then? That's a lot of money.
Yeah. Yeah. So, I mean, Andreessen is all institutional capital.
Oh, okay. There's no,
Yeah.
yeah.
I mean, basically it's all
I don't
institutional
know
capital.
enough about the VC world to. I don't know the players that well. I just know who he is, but yeah, that's wild though. That's a lot of money.
Yeah.
I wonder what will drive most of the migration. Is it like out of necessity? Or is it for opportunity? I imagine a lot of it's for opportunity, but if Canada keeps going this direction, I think some of it's going to be out of necessity. It's like, we have to leave, right? This is a spiral.
Yeah. I mean, I think like most things in life, it's going to be a push-pull, which is like, there's going to be, at some moment, there will be just enough pull. And then at some moment, there will be just enough push. And then different people will land at different points in the spectrum. So, yeah.
On the flip side, if you're in Canada, it's better to hire overseas labor because you don't have to worry about $100,000 tax on top of your H-1B or whatever it is. So,
Totally. Yeah. I mean,
advantages to everything, I guess.
yeah, dude, exactly. Yeah, that's exactly
Yeah.
right. Exactly right.
Yeah.
Yeah. Okay. Jeremiah, you were sharing a little bit about like Stamp did some layoffs. Do you want to just give some context and like I think it's an interesting moment because Tomer talked about Yotpo's decision. And again, like my view on these things is like not what is it that you're not doing, but what is it that you are doing? Because I think like the news is always about like the sort of cut or what you're not doing. And I think I think by focusing on that, you like strategy is strategy is like what do you say you're going to do and what do you say you're not going to do. And weirdly, because humans have such massive loss aversion, we talk so much about this thing. But I'm actually curious, like how you thought about the strategy of the company, and then like and therefore how it led to the decision.
Yeah, totally. I mean, just a little bit of context on Stamp. So I took over CEO in February. Stamped was purchased by Tiny, now the parent company, in 2021, from a guy named Tommy who had started this thing in Singapore, I believe is where he was. I don't know if he started in Singapore, but that's where he ultimately built the company. And so Stamped had a history of, I think it was 2015 maybe, was when Stamped first launched. And it was a rocket ship. When it was acquired in 2021, it was growing at a massive rate. I honestly don't know. Ironically, the public numbers are easier to look at sometimes than my own internal numbers because we switched everything from like Singapore to Canada and all this kind of junk. But anyway, so I think it was something like the trailing 12 months revenue when the company was purchased was like 11 million US. So it was, and it was growing at a very fast pace when the company was acquired in 2021. And basically, reviews products effectively competing against Yotpo. I mean, it came out at a similar time as Judge Me. So Yotpo is a big player, obviously. What's the Trustpilot, Bizarre Voice, some of these other ones. That was kind of like who the bigger companies were going with back then. Judge Me kind of came in at the bottom of the market and took a lot of the bottom of the market. And Yotpo was more of a like everything sort of company. We'll work with anybody. We've got pricing that scales based on the size of your business, all that. So that was how it started. I don't know when exactly the loyalty product was launched. It was 2020-ish. So a little bit before the acquisition, they launched a loyalty product, and basically Stamps became reviews plus loyalty, much like Okendo, much like Yotpo. Those are kind of the two biggest in that space. But this idea of you can come to us and you can get reviews and you can get loyalty software. And then Tommy sold and passed this off to somebody else. Well, long story short, Tommy was vibe coding, whatever the 2015 version of vibe coding was, this thing, right? And I don't mean that in a negative way, to be very clear. It's like the dude was a beast, just like writing code like crazy, delivering whatever customers asked for. It was like anything. If you were a customer of Stamped and you said, hey, I need this thing to stay on the platform, or I need this thing to upgrade my plan, or whatever that was, good chance you would get that thing. And so everything got built that people wanted to have built. But what happens in that context is you're not paying the cost of tech debt. Tech debt is a real thing, right? And I think this is something like if somebody who's listening to this who doesn't understand SaaS, or maybe is just getting started in SaaS, you have to think about the cost of maintenance of the things that you build. Like that is actually a real problem. So I want people to kind of take away some of that from this, and then also focus on what you're actually working towards. And so long story short, 2021 acquisition happened. And basically like the system that was handed over to the team post acquisition was hard to operate. It's just like the easiest way to say it. Like it worked mostly, but there were outages happening. There were like, it was all built in C#.NET system because that's what Tommy knew. So it's all like old school, like C# code on Microsoft servers. So you have Microsoft licensing fees. At the like pre-acquisition, a lot of this stuff was done like as cheaply as possible, but in a way where it's like you're just band-aiding things. And so post-acquisition, a lot of that stuff got changed, but it resulted in this really expensive tech stack that was, extraordinarily expensive to operate, hard to change. And then you have this interesting thing that happened, and this is the tech debt conversation becomes really interesting. It becomes tech debt isn't a problem until you hit scale. And that's when it becomes a problem. And so you get to like 2021, this thing has been growing, 400% per year or whatever that number is. And all of a sudden you're now adding as much data into the system on, a monthly basis as you added in the first 2 years sort of thing. Right. And so you have these things that could have been done better, like adding the right indexes on databases and some of this kind of stuff where you can't. Now the problem is becoming twice as bad every year, basically. And so just like the problem gets worse and worse. The ability to solve the problem becomes harder and harder because of the scale at which things are operating. And ultimately, like that was kind of the situation that Stamped ended up in. So all that to say, that's been what Stamped has been focused on over the last like 3 years, is getting out of that. So when I took over, that was the main focus, is like, how do we get this thing to a better place?
Can I ask a naive
No,
a
go ahead.
naive
Yeah.
question. So when I hear things like this, I'm just like, why not just take 5 of your best people and just write it from scratch? And then migrate as much of the customer base as is willing to onto the new product and say, we are sunsetting the old product. Like, cause like I mean, cause you're right. Like the problem with tech debt is it's not a linear thing. Like it does this. And then at some point you're just like, what am I even doing in here? Like, there's no documentation. I don't know this language. Like, yeah.
Totally. Yeah, and I think that was what the Stamp team was working towards, was rewriting everything when I took over. So that process had been in place. Everything was getting migrated to like Postgres database, Node, more of like a microservice-y infrastructure as opposed to like this monolithic thing built on top of Microsoft. So anyway, all that to say, that was the process and what was happening when I took over. And so we tried to accelerate it, but ultimately like layoffs happen because of financial reasons, right? And so effectively like all of this paired with lots of competition in the market. Reviews is highly competitive, loyalty is highly competitive. I think if you want to look at two players that are driving a lot of that right now, I would say Judge Me is number one in terms of like our competition, the things that are hurting my business. Judge Me and like Revo is actually a great example too on the loyalty side. Like they both of those do a really incredible job of doing one thing really, really well, serving that market really, really well. And ultimately, Stamped was in this position when I took over and where there's a bunch of things being done and not super well. And the other thing with both those companies is they're focused on Shopify only as well, right? And so Revo, for example, is Shopify only loyalty. You have one segment of I mean, there's smaller subsets of segments within that, right? But ultimately, like you're building your tech for one type of customer, which helps a lot. Whereas in the Stamped world, it's WooCommerce, BigCommerce, Magento, uh, Shopify, like all of these different things. And so there's a lot of complexity that gets introduced into that. So anyway, that ultimately is kind of like the backdrop to this. And so because of the lack of innovation and a product that just is like, does a lot of things well, but not great. And then you've got players that are doing things great. It set up financial distress in the business ultimately. And so that's effectively like the backdrop to getting to the point of needing to do layoffs.
I'm interested in the source of the financial stress. You mentioned that there was, a lot of tech debt, an expensive tech stack that came in to solve the tech debt. It was in replacement as part of the solution. Is that right?
Yeah, here's the other challenge with this is like hiring lots of people to work on this stuff. It means more expense, right? So you're basically like, if your revenues aren't increasing, but you're adding more people to this now. Like we have to run this business profitably. We don't have any funding that we add to this. So you've got more people working on this. And then your infrastructure costs actually go up because you have to maintain this old thing still. That's still the same cost to run. Plus now you're spending money on these new things. And so there's this expansion of expense that happens at the same time as contraction of revenue. And that can only go on for so long until you end up in a situation where that's untenable. So does that make sense?
That was going to be my question. I was going to say, is this a growth in operational expenses that impact the business's ability to scale, or does it create an expectation of scale from the business? But it sounds like it did both, right? If your fixed costs from labor, from salaries are going up, but then also your infrastructure cost is going up, it's getting increasingly more expensive to fulfill to customers at
Correct.
the same time as creating an obligation for the business to be bigger to meet the fixed cost.
Correct. Yeah. To maintain profitability, the business revenues have to grow. And in this environment, they're shrinking. And actually, I think I'm just going to blame Judge Me. Like, honestly, like that is the number one factor. If I had to pick like one, you could also chalk it up to market. Like, it's not just the fact that
Yeah,
There's an
I
appetite in the market for cheaper software. Like PJ has really like driven this idea that reviews are worth $15 a month. And that makes it harder to sell reviews at $300, $500, $2,000 a month. Like that is the reality of this. Unless you have something that is differentiating enough to make that worth doing, right? So like when we have a customer that's trying to push their reviews into Sephora, we can enable that. JudgeMe can't. That for that brand, because they're actually driving purchases in a marketplace using reviews to help with that whole process, that is actually worth thousands of dollars a month potentially to that brand in a way that another brand who's just trying to like all they want to do is collect reviews on their site and show them, they might say it's only worth $15 a month to me.
I'm going to share something that was shared with me yesterday. So I met this investor yesterday. I'm not going to share anything that will identify either this person or the companies in any way. I don't think that it is. Yeah, I don't think that your experience is a micro issue. In a totally different category in e-commerce, um, there's a different company that has seen shrinking revenues over the last, like, call it 6-7 months, to the point to which that company is now like expanding outside of e-commerce. Like the founder is back in quote unquote founder mode, and they're expanding outside of e-commerce and doing so like with extreme speed. And I I I, I think like I think there are two things that are being underappreciated about like quote unquote core Shopify e-commerce today. I think the customer base is more challenged than most people are willing to discuss publicly because it doesn't actually help anyone to talk about it publicly, especially and including Shopify, um, to whom it would hurt the most if they disclosed anything publicly, right? Okay, so that's one thing. Um, which, by the way, I don't know that it's true, but I'm saying I suspect it is. And if it is, then we will never know because it is not in anyone's benefit to disclose it. Okay. And then the second thing is that, and this part I think is really underappreciated, is that all new software expense is AI software expense. 100% of all software expense. And in fact, in every other category that is not AI software, there is consolidation happening at rates that are unimaginable. Unimaginable. Like, because that budget is being taken for, like, you have the rest of your tech stack budget, and then you have your AI budget. And the AI budget, yes, some of it was made up, but some of it was made up by saying, hey guys, from over here, you need to go from this to this. And then I'm going to take this and put it in the AI bucket. That's happening. And I think not acknowledging that, um, if you're operating a SaaS business, is like putting blinders on. Okay. Like you have to confront that, and you have to confront that very deliberately and diligently and be like intellectually honest about it. I think that leads, I'm sorry, this is like all commentary, but my question from all of that commentary is you just described what you are going to not do. So what are you going to do? Like let's say you now have a point of view of like, hey, here's what I think the market structure is going to look like. Here's what I think is not tenable. I've shared my view that I like roughly agree with the market structure. I believe that the only thing that is growing is AI related software. I don't believe it is happening in the Shopify ecosystem, but yeah, I'm curious how you think about the go forward strategy I mean, and don't share like product roadmap style info because obviously we're not trying to create competitors over here, but like, how do you think about market structure? Yeah.
Yeah. Well, there's a couple of things here because the interesting thing is you can still win in a market where people are willing to spend less if you are optimizing for that, I think. And so if you look at like, I mean, a Judge Me is actually a great example in my opinion. Why would you, there's not really incentive to switch off of something that's $15 a month and go to something that's $10 a month unless it's meaningfully better. The cost just doesn't matter, right? Like it's a low enough cost, it doesn't really matter.
Totally. I just think that it's very hard to grow those businesses.
Yeah, you get to a point, but does that matter? And there's actually, and this is what I'm trying to get at, is like, I think there's a point where it's about like my objective in the context in which I operate this business is to run a profitable business that ideally is growing. Let's say I was doing like maybe operating a business at 10 million in revenue with 3 million a year in profit is an acceptable outcome. In that context, the market in Shopify app space, depending on what you're doing, is probably big enough that you can optimize towards, well, in reviews. In reviews, I think this is the case. You could optimize towards low cost, highly performant, highly cost oriented structure of running a business. You don't think so?
No,
but
I don't think so. I don't think
you
so.
know,
I think,
what's your,
dude, I think the problem is that that'll be true for 5 years, and then it'll go from 15 to 5, and all of a sudden your $10 million business is a $3 million business doing negative 3 million of EBITDA if your cost structure hasn't changed.
yeah, well, that's and I guess to be clear, when you're asking about my strategy is to say like the things that we do today need to be done more efficient. And then we need to innovate on top of it in a way that's meaningful. And you can guess at what innovation looks like today versus 4 years ago, right? The market's changed, the needs of customers have changed. And that's ultimately like the big thing in this is to say, look, we have to stop doing things. There's so much like this business operates the way it does today. And we're changing this, but it operates the way it does today because of what happened 5 years ago and because of the decisions that were made 5 years ago. That can't happen. New information comes available, markets change, needs of customers change. All of like what an e-commerce brand wants today is different than what it wanted 5 years ago. And so we need to be thinking about that, and we need to be building that into our strategy, not saying we're going to make this thing better just because it's not very good, for example, or we're going to make this more efficient just because it's not efficient. You need to be willing to divest potentially from this thing that you're doing that was relevant 5 years ago, but it maybe isn't as relevant today or won't be relevant in 5 years. And so you have to be thinking about how do we take new inputs, market changes, and use that to guide what's happening. And obviously, like right now, AI is the biggest thing, and it's going to become bigger. It's not going away. But yet the needs of an e-commerce brand now are different than they were 5 years ago.
You guys seen this meme? It's like a bell curve, and then at one end is like I don't know, someone who's very experienced. At one end is a doofus, and then you got like IQ from left to right. And yeah, I wonder if AI is just one of those things. Right? Everyone who's building now and is building something that they want to be successful is looking at it and going, well, what is it that the market wants? They want AI, so I'm going to build AI. But then there's a lot of people who are already in the market and they don't have to build AI because what they've got going already is doing fine. So yeah, I wonder to what extent like the people who are just coming in and building their thing right now have this immense benefit because they have a perfect read on, or like the ones that are building the right thing have a perfect read on what the market's asking for. But then the people in the middle who've already got something, they've got a lot of tech debt. It's hard to build AI on top of what they've already got. You're going to fall behind, right? And I wonder if there is some space here AI is definitely part of the market demand for sure. Just AI, the two letters slapped on any product, even if it's not AI, is going to suffice for some people. But then I wonder to what extent like the demand is actually for what AI represents, which is like minimized inputs, maximized outputs, like profit, right? Because you got Oliver with Bustum and it's growing. It's basically a service business, right? But as long as you're able to represent value created for the business that's profitable, you're able to grow, right? And if I think about the e-commerce consumer, the type of person who comes to a business like 4Play, or they come to Format or No or Stamped, that's what they're asking for. That's what they're most interested in, separate from anything that has the two letters AI written on it. They're looking for something that's going to be profitable for their business, revenue generating. right?
I I think that's true longer term. I do think right now, though, there are people who are literally being given mandates to go add AI into the functions in their job. And so I actually, like, this is actually really interesting because I think if you look at, I don't think startups have ever had a bigger advantage than they do right now in software, because what happens when you build a company, when you have 0 customers, you can roll out a feature in minutes. You don't have to worry about how it impacts somebody else. You don't have to worry about any of those things. And it's easier to do that now than it's ever been with AI. When you get to the point where you have 100 users, now you have to figure out how do which group of these users does this not work for out of the box, and how do we solve that problem? And it's maybe 10 of those 100 users. You go to those 10 people, you explain to them, hey, you got to do this thing instead because of the way this works now, and you update it for them, and it's not a big deal. When you get to like stamped, the scale that we're at now, where you have 10,000 users, you can't go to 1,000 people efficiently and say, you got to do this, 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 and this. So now you have to solve these edge cases. You actually have to like build in backwards compatibility for things. You have to do all this kind of stuff that is like, or you just say, sorry, and you piss people off. And that is like,
Yes. And I think everybody should do that. Sorry, I'll let you keep going, but I have a very strong point of view on this, but I want you to finish your thought.
okay, great, cool. But I think that's, so I think the thing is, today established software businesses are asking that question of, can we just tell people, sorry, you can't do that anymore? Can we, or do we just build these things? And even if you are building it, you still have to think about how to make that decision. Like there's a point at which you can't tell 90% of your customers, sorry, you can't do that anymore. So you still have to build the solution to get to the point where you can make that an acceptable trade-off, right? And so, well, you sounds like you have a different opinion, but anyway, that's the way I think about it. And I think that's where builders today have a massive advantage. But the only thing I do want to say about this is, I don't think the fundamentals of running a company over time have changed. And so I do think there's a lot of people that are building very cool, compelling features today that don't know how to run a business and aren't actually going to be able to make it through the ups and downs that happen in this context. And so I do think there's a lot of companies that are moving very slowly today that you're going to see 10 years from now out executing these companies. They just can't move as fast because they have to, or at least they feel like they have to. And maybe you disagree with Rishabh, but depending on how their business is structured, like there's different considerations that they have, and they can't just like launch something from start in the same way. And that's always been true, to be clear. Like most startups, if I look at the companies that start at the same time as most of them are out of business, that are kind of in the e-commerce aspects, or they've sold and been rolled into something else, or like there's not a lot of them that have actually like executed well. And actually, I don't even mean that as a knock. I hope it doesn't come off that way, but it's really hard to do that. And not everybody wants to do that. It's actually a totally different way of building a business. Like you get to a certain point where it becomes about operational efficiency as opposed to building cool things. And that's not something that everybody wants to do. So yeah.
That was a lot. Okay. So I'm going to try my best to like break down the things that I think I am hearing. You tell me if I'm mishearing something. I have a pretty extreme point of view on like how one should operate a business today, especially in software or SaaS, whatever you want to call it, AI, also, whatever you want to call it, software. I think, have you guys listened to the Owen McCabe podcast with Lenny by any chance? Like on Lenny's podcast? Okay.
No, I haven't. I'm familiar with Lenny, but
Yeah, I strongly recommend it. And if I can somehow get Owen to come on to this podcast, actually, you know what? I'm going to send him a note. I'm going to try to get Owen to come on to this podcast. I listened to this podcast and it completely shifted how I think about running a business. Completely. And the decisions he made, it sounds like, and he didn't get into like as much detail, but he got into a good level of detail. He cut $70 million of ARR in order to shift his business to being an AI first business. He just like said sorry to $70 million of revenue. So when you say something like you cannot say no to 90% of your customers, I don't think that's true. I don't think 70 is 90% for him, to be clear, right? I think it's more like 30, right? They're probably at the 200-ish. I don't know what their numbers are, right? Because it's a private company. Probably in the 200-ish, probably cut 70, whatever it may be, whatever the trades may be. I think that there are true decisions to be made as either CEO or founder, and your board matters a lot in this context as to like what types of decisions you as the CEO are allowed to make and what type of risk you're allowed to take to just say, you know what, this thing, I don't see the opportunity. I'm going to do this other thing. And we're just going to go full force into this. Like the example I think of is Handshake. Do you guys know what Handshake is? It's like,
It
no?
sounds
Okay. For 5 years, this company Handshake was like a recruiting platform. Okay. So it was like the way that you would like go and hire people from college is if you've ever done like campus recruiting, it was like on a platform called Handshake. Okay. They completely pivoted their business in the last 9 months to just like finding people to do AI data labeling. And the company has skyrocketed. Mercor, again, started as a recruiting platform. They said, actually, you can't hire anybody here. The only thing you can do here is go find people to do data labeling for AI like foundation labs, right? So they actually literally to 100% of their previous customers said, sorry, actually, we're not doing that anymore. Now, I think like the risk tolerance that you have to be willing to take as CEO and as a board to do those types of shifts is just like at a fundamentally different scale. Because you're saying like sorry to like basically your revenue base and your customer base that you've made commitments to, right? But I think that level of risk is being rewarded right now. And I think the reason I disagree with you is it's not that I don't think it's the right or wrong decision for any given person. I just don't think that it's possible to say that you cannot do it. I actually think that in today's environment, you specifically must interact with that question.
so. To clarify, I agree with that in terms of like making big strategic bets like that. I was more talking about like innovating on an existing product from like a feature set standpoint. You have to like if you're trying to service the same set of customers, you can't just like I mean, you could, to your point. It is possible, but it may not be wise to constantly do things that are going to break their experience with your product if you're trying to service that product in the same way. I do, though, agree with you on like the strategic bet piece. And I do think there's a way in which you can go about that where you minimize the risk of that, especially if you need that money. There's maybe ways in which like you can do that in a gradual way. You pull different things, but I think that also may not make sense depending on how fast you're trying to move on things. So yeah, I do agree with you from a strategic bet standpoint. You got to just go for it.
Yeah, I think like Jeremiah, your version of the world, I would call more the Netflix version, which is like you say like, hey, DVD team, you can just keep doing whatever you want, but I'm not going to talk to you. Like, because I need the streaming team to become the company. And so like they didn't turn off the DVD customers, but they completely, from an organizational standpoint, isolated it. And so like th- the great thing about business is that you're probably not creating something new. Like somebody has done this before. So you could just like study how like great, how really good people have done it. So like, I like, yeah. And
I
not a
would,
shock.
yeah. I'd argue Netflix is a great case study of that then in that context of somebody who's done that at a very high level and had massive success with it.
Yeah, I'm struggling. I mean, I get it from why you would take these risks. It's just aggressive entrepreneurial discovery. But like, why to completely pivot out of existing business? Is it not just a new business, right? And this is one of the strengths I think that Judge.me has. Their defensibility from having such a wide user base is incredible. right? If anyone's going to release AI focused products in the review space, I would be extremely bullish on Judge.me to hit a home run with it, right? But apart from that, apart from the user base and upsetting some of them and churning a huge amount of them off, I don't understand that process of entrepreneurial discovery in a business. I mean, I guess this is on a case-by-case basis. I don't know the specifics of the businesses doing this, shutting down huge parts of their existing business to create new ones. But to me, it's just a different business, right? You can continue to serve some customers with some business, and lots of businesses do continue to serve a growing or a shrinking user base while doing something else, right? Like Yotpo doing Yotpo Labs, right? They're discovering new stuff. They're investing in that. But they're not shutting down Yotpo to do it, right? Although they might be shutting down certain products, right?
But I think you do that when there's a shift in the market that's big enough. Like I actually think the Netflix example it's such an easy, tangible example of they saw before Blockbuster and obviously a lot of others that DVDs were going to be replaced by streaming. And so in that context, you can look at that and say, well, this business, it may not be dead today. It may be even more profitable in 5 years than it is now because of scales of economy and all this kind of stuff, but it's eventually going to die. And so we need to invest in this other thing. I think, I don't know if that answers your question, Jack, but I do think that is where like a company can look at this thing. They're like, we know this thing, we understand this space, and we see how something is changing in a way that's meaningful enough that we need to invest differently than we are today.
I'll give another random example that I saw on Twitter yesterday. Do you want me to share my screen quickly? Did you guys see this? Drew's post? Do you know what I'm talking about?
Oh, I saw this as well, yeah.
Do you know this? Did you see this, Jeremiah? This company is like whatever. This is like one of the fastest growing D2C supplement companies. Okay. But look at this. In 2014, it was started as a genetic testing company. These things have nothing to do with each other. Like I think like I'm not gonna go through the whole thread. It's hard to overstate, Jack, like how much I think that like the job of entrepreneurship or business building is to like really make really hard decisions. And like completely shifting the business is what I would describe as a really hard decision. If you guys read Hard Thing About Hard Things, like that's what even Ben Horowitz did. Okay. Like, but it is a thing that you do as like, especially as a founder CEO, um, much harder to do as a quote unquote hired CEO. I think Jeremiah's context is different because he is a founder who has increased CEO responsibility. So I don't think it's like fair to say that you're a hired CEO in this context. But yeah, I don't know. Like I think like look, I think people should try like I think people should want to build companies, but the longer I do this and the more I realize like Jeremiah, what you said, that like business building over the long term is a non-trivial game or a non-trivial task. The more I realize like you have to be willing to do these types of things that are like seem extremely non-obvious or seem like why would you ever do X in order to hit the home runs. Yeah.
And I also think it's worth noting like I started I'm incubated it within Lunar Soul Group, but all that kind of stuff. We split it off into a company, run that. No is still growing well, profitable. It's the thing I started. The team still likes me, all this kind of stuff, right? Like it's a very different feel than stepping into a company and doing layoffs 6 months later. And that is actually really, really hard. Like in the context of being the founder of a startup that's still a relatively small team and nothing's ever really gone wrong, everybody likes you. There's no like, you haven't hurt people's feelings. You haven't had to do anything really, really hard. And I think what happens, every business gets to a point of hardship. Like that is just how it goes. It gets shut down for some reason. You like yeah, like no has not had any of those like really big points of hardship. And so like the context of the of it is different. And what it feels to be building in that space is totally different. And then you get to something where there's actually like hardship. And it is, you have to really push and fight in a different way. And you have to make way harder decisions, I think. Um, and yeah, so I guess just kind of along with what you're saying, Rishabh, like it's over the long term, you have to do that. And I don't think, I still am not sure if I'm cut out for that. Like, just to be perfectly honest, like, I don't know if that's something, like, could I ever be the CEO of a Fortune 500 company where like those kinds of things are happening all the time? Like, I doubt that, or I shouldn't say doubt. I question that, right? But like for me, this is a bit of discovery too, of like how far can I go down that road of being the bad guy sometimes, being like, hey, there's these things we have to do, and it is not actually fun to be disliked for ultimately doing things that you didn't really have a choice about. Like you have a choice of the way in which you do it, but when there's not enough money to fund the business as it stands today, or there won't be in the near future, you have to make hard decisions about what that looks like. It's not really a choice in that context. So.
Yeah, I if anybody is listening and you're whatever 40 minutes in and you're listening to this part of the conversation for whatever reason, because you like love pain and you love listening to Jeremiah, Jack, and Zach and I talk about it. Um, I- I'll say two things just for what very little it's worth because we're kind of like in a negative space. One is I wouldn't trade it for fucking anything. Okay. So it's like the fulfillment that I get from building business and creating value in the world and things like that, I would never trade for anything. And the second is it's not for everyone. Um, because like the truth of the matter is like there are things that you have to do that are really hard. There are decisions that people are going to disagree with. And guess whose fault it is at the end of the day, no matter what? It is your fault. So like like no matter what. All right. And yeah, Jeremiah, I mean, like, I hope I do things the right way over time too. Like, I want to play extremely long term games, right? And I've been fortunate enough that I've had people follow me across multiple roles, across multiple companies, because I think I do things in even like, I've fired lots of, not that I take pride in this, but I've probably fired like 70 people over the past decade, like personally, right? And even amongst the people who I have fired, there are people who want to work with me again. And so I think I do it the right way. Are there people who hate me? Of course, right? Like, but you just have to do the best you can. But yeah, there's like moments in companies that are these clarifying moments. But again, I think building right now, if you're not doing this sort of stuff, you're probably not building your company correctly. Like Facebook just announced another set of layoffs. Okay, they make more money than God. Okay, like Amazon probably announced a set of Amazon record earnings and layoffs. You guys saw that, right? This week?
I didn't see that, but
Okay. Yeah. Okay. Layoffs. 2 days later, stock pops 10% because of record earnings. Okay. Like, I think people totally underestimate what business building is like today. Um, at all scales. Yeah, at all scales. But anyway, this was a wild convo. Sorry, Jeremiah, go ahead.
would say, and what that is at the Netflix, or not Netflix, at the Amazon scale, the Meta scale, is it's there's so many things going on in these businesses. The company is evaluating and saying this thing isn't important anymore. Doesn't mean that like the people aren't important, but at the end of the day, like this thing within the business is not important anymore. We need to change what we're doing here, and we need to make that something different. Or I mean, that's ultimately what it comes down to. You're overstaffed for some reason. You're doing whatever it is. Like the thing that you need to do tomorrow is not the thing that you've been doing in the past. And I think that is a constant process in business of optimizing, is to ask that question. And hopefully that doesn't look like layoffs, but I think it does oftentimes, especially at scale with these companies.
Mm-hmm. Do you guys think, I'd love to hear your thought process on this. Do you think that the decision to kill certain products, to kill certain parts of the business comes from both an understanding of the cost and the risk that part of your business represents moving forward, but then also the benefit of reallocating resources and the reward that's on the other side of that. Because I'm not sure if you guys, I'd love to have this guy on. Have you guys heard of levels?
Yeah, I have.
He's got like so many things that are one like deviation away from each other, right? At any point, you could have killed one of these things to go all in on another thing. They're actually a little bit smaller than I thought that they were, but they're all pretty close, right? Maybe sharing some user base. And I wonder, for him, I imagine that these all independently represent good business, even though some of them might be quite small, and not a good reason to start reallocating. But yeah, maybe what do you guys think? Is it from an understanding of the cost and the risk, and then the benefit of reallocating some of those resources over?
I think no one should ever try to reproduce what Peter Levels has done. And I think attempting to do so is extraordinarily foolish. Yeah, like, sorry. There are more unicorn venture funded startups than there are Peter Levels in the world. There's one Peter Levels, and there are like 2,000 companies that are worth over $1 billion in the private markets. Okay. What does that tell you? It tells you it's easier to build a unicorn private market valuation company than it is to do what Peter Levels does. And I think no one should look to Peter Levels' model and try to replicate it.
I think about opportunity at cost a lot. And that's like one of the things that in that context, I mean, he's like clearly not, well, I mean, it'd be interesting to actually hear from him, but I seriously doubt he's regularly investing time and resources into all of those things. And from what, in my own experience, that's never gone well for me over time.
I think he's a genius. Like, I mean, I think that the problem is that because he's like laying back and like small business, it makes it look easy. Massive miss. I think he's a fucking genius, and to view him in any other way is massively mistaken. Like, truly, that's what I think. And the way that you can see that is that there's like, Jack, can you think of anyone else who has done that? I can't think of any. Like, the maximum I can think of is someone who has run like 2 businesses at the same time successfully, maybe 3, but none of them are laying back on a beach. While they're
Oh, is that what he's doing? I don't follow what he's doing in the on his feed, but so he's chilling on a beach while running like 8 businesses simultaneously. That's interesting. Yeah. No, I don't know. Just a few on-ons, right? Every now and then you see them on X. I want to get one of them on here, like that. No one knows, but they run like 3 things, or they run like 6 things, and you're like, wow, this is and they're like a 1-person team, right? They've got no developers. It's just them, right?
I do not mean this in a negative way at all. But the reality is, if you add up all those revenues together, it's still not a very big business. Like, it's great. To be clear, I'd be very happy to have that for myself. That would be great. But it's not like these things are like hugely successful. Like, they're good, but they're not great in the same way.
Dude, I think this might actually be the point, is that he's a genius level person because he has managed to do this, and this is the outcome, and he can make whatever decisions he wants to make in terms of how he wants to live his life, and he has an amazing life. And he's admired by so many people. Like, let's be clear, he's fine, and he's going to be fine, and he's like an icon, okay? But you don't do. He's not an idiot. Right? Like, and so like, it's hard to replicate. It's very hard to replicate. Yeah.
And at that level of success, something like a Judge Me does 3-4 times the revenue that he does. A single product, single focus company.
Right. With next to no marketing for most of its run. Yeah, it's interesting.
Alrighty, gents. This was wild. This is a wild convo. Um, all right. I think this is good.